On Point with Craig's Investment Partners.
The information provided here is general in nature and it's not financial advice. It doesn't take into account your financial situation, objectives, goals, or risk tolerance. All investments are subject to risk and none are guaranteed. So before you make any decisions, we recommend you contact an investment advisor. For more information about our services or to view the Craig's Investment Partners financial advice provider disclosure statement, please visit our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. Morning team, hope you're all well. A bit of a shorter one today. I've been on annual leave for a week, so I've missed some of the action over the last several days, but I do have some thoughts that I want to share with you about what's coming up in the week ahead. It's about 1 p.m. on Saturday. I feel like I need to timestamp this episode because there might be some trade announcements that will come out over the course of the weekend. So we're talking about what we know today in terms of the information that we've seen right at this point. Last week wasn't a bad one for most share markets. We saw the S&P 500 in the US rise another 1.7%, so it finished at a fresh record high. Other markets were more mixed, but the local market put in a good performance. The NZX 50 was up 1.5% last week. Now we're still 2.6% below where we started this year. And while the S&P 500 is up 6.8% this year, it's also down slightly in New Zealand dollar terms because we've seen an 8.3% increase in the NZ dollar US dollar cross rate. So some good and bad there. Markets did like the non-farm payrolls report last week, the jobs report. We saw more jobs added for the month. We saw a lower unemployment rate, and that saw expectations for Fed rate cuts fall back. So interest rates were up and the US dollar was up in response. Just before that jobs report came out, markets were pricing about a 25% chance of a rate cut from the Fed at their July meeting, but that fell back to about 5% afterwards. So a stronger US economy means less need for the Fed to take any action. However, it is worth noting that when you look under the surface, parts of that jobs report were more fragile. So good news that we've got a lower unemployment rate, that there's more jobs being created, but when you look at the detail, things weren't quite as strong as those headlines suggested. The other big event in the US was the passing of the One Big Beautiful Bill. Now, the final vote of 218 to 214 was actually fairly comfortable, given the much tighter ones that we've seen in recent weeks from both the House and the Senate before it went back to the House. Now, that's a positive for markets at least, that we can put this behind us. It takes the debt ceiling debates off the table for at least the next couple of years. That's one less thing for us to worry about in the months ahead. However, that long-term debt position in the United States now looks even more concerning. So that is something that we will have to take into account as well when we're thinking about the long term, 5 years out, 10 years out. So a short-term positive, but it doesn't really solve any of our problems in a longer-term sense. Looking ahead to this week, though, and it will be a busy one, internationally, it's going to be all about the end of that 90-day reciprocal tariff extension, which expires on July the 9th. Now, that's Wednesday, but that's in the US, remember, so it'll be Thursday here in New Zealand when that expires. Now, we're all waiting to see if there will be any new deals or any further extensions, as well as to see what those tariff rates will look like. Now, late last week, President Trump did say that his administration will send out about 10 to 12 letters on Friday. So that's Friday last night in the US. That happened to be Independence Day. The markets were closed July the 4th, and that additional letters are expected to follow in the coming days. So he said these would notify trading partners of the new tariffs on their exports and that they would be effective on the 1st of August. So he's saying that they'll be covered by the 9th, which is next Wednesday, and that applies that we should know more early this week. We'll just wait and see. Maybe there is even some more negotiating time too, because if they're not effective till 1 August, there's that window of 2, maybe 3 weeks where they could do a last minute deal. So let's wait and see. I'm sure there is more to come here. With the S&P 500 at a fresh record high, going into this crucial week, it really does look like investors see little chance of a scenario anywhere near as bad as what we saw back in early April for Liberation Day. So markets are taking this in stride, but we'll wait and see how this week plays out. We'll watch that with interest. On the economic front, outside of the tariff deals, we'll be looking for some of the highlights, which will include the latest Fed minutes. They'll be out in the US. We'll get inflation figures in China and in Europe. We've also got the BRICS summit this week that takes place in Rio in Brazil early in the week, I think Sunday and Monday. That could be important for oil prices too. So lots to watch. Closer to home, monetary policy will be in focus. The RBA, the Reserve Bank of Australia, and our own Reserve Bank of New Zealand are both set to announce interest rate decisions this week. So let's start with the easy one, which is the RBA. The RBA is almost certain to cut interest rates again this week by 25 basis points, 0.25%. That would take its cash rate down to 3.6%, and that should be confirmed at 4:30 p.m. on Tuesday afternoon. That's 4:30 New Zealand time. Now, the Reserve Bank of New Zealand decision will be out the following day at 2 o'clock. And there's no press conference this time, no new forecast set. It's not a monetary policy statement, so all you get is the decision and a one-page statement, no presser. Right now, we're at 3.25% for the official cash rate, the OCR, so well down from a peak of 5.5% this cycle, and within the range that's generally considered to be neutral, which is probably in that 2.5 to 3.5% zone. So we're almost at the end of the easing cycle, but not quite. Markets see at least one more rate cut to come from here, maybe two, depending on how things play out. Now, nobody expects any change this week, though, with market pricing pointing to an almost 90% chance of a pause this week. And then that next cut, potentially the final one, then expected to come in August or October. That's what financial markets are expecting. I would love to see the RBNZ go against the grain here and cut this week anyway. The economy is still very sluggish. There are minimal inflation pressures out there with unemployment still pushing higher. We saw the QSBO survey this week, which covered the June quarter. Very mixed, and there's a growing gap between the recent performance for most firms and what they're hoping for. So in some ways, some of those expectations are starting to look a little bit optimistic given the state of the economy. So I think it's decidedly sluggish out there, and I'm just not sure there's much point in waiting around. The RBNZ has signalled that it will do more in terms of rate cuts, and the market knows that there's at least one more coming. So I'd really like to see them be proactive and take some action. Market pricing suggests that's highly unlikely, but I think it'd be the right course of action. So I really do hope that they ignore market expectations, ignore those economist forecasts that are suggesting a pause, and cut again, get us to 3%, and then they can reevaluate in August and October and either do more then or stop there. But I think we need a circuit breaker of some sort to just get ourselves out of this pessimism loop that is really holding us back at the moment. Okay, that's all for today. Enjoy your week, team, and we'll talk again soon. Thanks for listening.
For more insights, visit craigsip.com.